Welcome to the fifth video in the Apartment Development Fundamental series. Today I'm going to be talking about the question, how much will my building be worth? In other words, how much money am I going to make if I build, lease up, and sell this building? If you're going to be building apartments, then likely you're going to be switching from another asset class to this asset class. And you're not going to switch from another asset class to apartments if you don't make more money in the short term, the medium term, and the long term. So the financial analysis here is particularly important to you if you are a new apartment developer or a first-time apartment developer, okay? So there's three numbers you need to know. The first is development yield. So development yield is the NOI, the net operating income, over the total development cost. So let's in an example just say that your development yield is 6%. So you take your total net operating income, divide it by your purchase price, and you come to 6%, okay? That number comes out of your financial model based on the rents, the expenses, the cost of money, et cetera, et cetera. It's an important number. Now the second number, you don't determine, the market determines that. And we call that the exit cap rate. So what is the value of the building at some point in the future when you refinance it or you sell it? The exit cap rate is the net operating income at stabilization divided by the value or the purchase price, okay? So now let's say that comes to 5%, okay? The yield spread, that is the difference between the development yield and the exit cap rate. And so if we were 6% development yield and our exit cap rate is 5%, then your spread is 100 bips, okay? Now you've got to ask yourself the question, is 100 bips enough profit for me to justify this project? If it's a large high-rise deal and you've got a patient buyer or you're an institution building it, then yeah, it probably is. But if this is an office conversion to an apartment building, it's probably not, because a conversion is a tricky, hairy deal. Lots of things can go wrong. It takes twice as much time to do it. It costs more money than you initially think because you don't know what you're going to find as you start tearing down walls and things like that. So I would say that 100 bips may be enough for building a conventional apartment building, but it's probably not enough for a difficult conversion deal. So the spread is really dependent on what your profit expectations are, what your risk is, and and sometimes what your time horizon is as well. On the screen is a chart that shows you the spread between the expected development yield and the exit cap rate. The higher the spread, the more money that you're going to make. What we're showing you here is the development yield between Tier 1, Tier 2, and Tier 3 cities. For example, a Tier 1 city might be, Boston, Miami, or Toronto. A Tier 2 city might be Phoenix, Tampa, and Winnipeg. Or a Tier 3 city may be Cleveland or Quebec City. You can see from the table that the spread varies from city to city, and that the highest spread is on the bottom right-hand corner of the table, where we're building suburban product in a Tier 3 market. But that's not the most liquid market. It might be the most profitable in this example, but it doesn't have liquidity. Over time, investor demand changes. It changes from city to city, and it changes from product type to product type. So what should you build if you're just starting out in this business? Well, my experience has taught me two things that I should say to developers when I first meet them. Number one is build a build form that you're already comfortable with. So if you're building 4-story product for sale, then the learning curve to build 4-story wood product for apartments is much easier, right? So I would suggest try and build a build form that you are comfortable with, that you built before, that your general contractor is very comfortable with. The second thing I'd say is stay within your geographic footprint that you're comfortable in. This is where your relationships are, this is where you know people, and this is where you know the market and you feel comfortable. So if you stick to those two things on your first deal, I think you're going to ensure a higher chance of success. Then in subsequent deals, change your build form, make your geographic footprint bigger. But that's a good place to start. I'd like to thank you for watching the entire Apartment Development Fundamental series. If you've made it this far, then you're probably pretty serious about building apartments. So are we. We've been doing this for 30 years. It's our passion. Really, it's all we do. Keep an eye on your inbox. We're going to send you an exclusive invitation to join us at Apartment Developer University. I'm going to be teaching you, with guests from around the world, strategies and techniques that you can build to ensure that your first apartment development project and subsequent projects are a success. Look, building apartments is a wonderful opportunity right now, but you want to get the first one right. You don't want to take the bloom off the rose by making mistakes. If you're building a 100-unit building and you make one design flaw, in your units, you're going to have 100 mistakes, right? We're going to give you the information you need to get this right the first time and make a higher profit than you're making with more stability than the other asset classes that exist out there today. We run our Apartment Developer University in Zoom meetings. That gives us the opportunity to put you in chat rooms with other developers just like you, facing the same problems in other markets. Now imagine meeting, over the 8-week course, 20 or 30 other developers who are going to share with you their own strategies. You'll be exchanging email addresses. You'll be sharing information back and forth with people who are experts in some places, and maybe you're helping them in other places. But it's a wonderful community that we build. So we look forward to you joining us.